Hey, what's up guys, Michael here. In today's video I will be talking about fairly new indicator, which is the Vortex Indicator, and I will show you a couple of strategies that are in which the Vortex Indicator is combined. So as for the Vortex Indicator itself, it was introduced in 2009, so as you can see it is a fairly new indicator compared to the, for example, indicators of Bill Williams, etc. As for you to better understand what a Vortex Indicator is, what it shows you, what it indicates, I will show you firstly the ATR indicator, and therefore it will be easier for you to understand how the Vortex Indicator works, how it differs. Because ATR indicator, the average true range, basically shows us the average volatility on the market. The calculation is that it subtracts the current high from the current lows, and it divides that on the time frame that is set on the indicator, and therefore we see what was the average range traded on this on this time frame. So basically it shows us, as I said, the volatility. But the minus for this average true range indicator, it doesn't gives us the signal, as we can say, maybe the signal that, but it doesn't indicate who has the advantage on the market. So as you can see right here, there was a spike in volatility, there were bigger candles, higher highs, etc., and the ATR shows us bigger values. But as well as right here, when, for example, here we had a couple red candles, it also went up. So basically, as I explained, it shows us kind of a volume, we can say. And the thing is, with the Vortex Indicator, it shows us who has the advantage. So this is a kind of a volume indicator. So let's delete the average true range and go for Vortex Indicator. So the Vortex Indicator is, this is on a TradingView platform. So the Vortex Indicator is not a built-in indicator in the MetaTrader platform. So you will have to use TradingView or other platforms that, that has it in their offer. So as you can see, the Vortex Indicator looks like that. It has two lines that are crossing each other multiple times, and the blue line shows us the moment where the bulls are in advantage. The red line, or this purple, we can say, line shows us where the bears are in advantage currently on the market. So guys, I will not go into detail about the calculation. I will just briefly explain how it is calculated. So in the Vortex Indicator, the calculation is that it takes the current high, subtracts the previous low, and divide that by the true range, which is current high minus current low. So that's the formula for as you can see, for this bullish line. And for the bearish line, it is the opposite, which is it takes current low, deduct the previous high, and then divide that by the true range also for the last 14 periods. Also, you're probably wondering why it doesn't have the minus values when it subtracts the current low from the previous high. It is because in the formula it is written that the indicator needs to use the absolute value, and as we all know that from the math lessons from the school, the absolute value, for example, absolute value for 5 and minus 5 is 5, so therefore it doesn't have the minus value, but which is great, because for us it is better to to visualize, and for the programmers to visualize this indicator, and it helps us to read it, to use it. So as for the indicator itself, how does it work? Well, as you can see, it looks similar for any other indicator. For example, the RSI, etc., the MACDs, it has lines and they are crossing each other. So basically it works like that. When the line crosses any other, for example, let's check this moment. When the blue line crosses the purple one to the upside, that means that the bulls will be in advantage, and therefore it will signal us the bullish movement, the movement to the upside. And in the opposite, when the purple line crosses the blue line to the upside, it signifies the moment when the bears will be in advantage. So as you can see, for example, right here in this candle, from this doji we crossed, and therefore it signified, now for this example maybe it's not the best one because we had the sideways movement, but yeah, either way it didn't went up, it didn't broke out from here despite multiple crossovers. So as you can see, it produces also false signals. Like everything else, it's not a holy grail, but I will show you two strategies based on this indicator. So the first strategy is that, as you can see, here we have in the middle, there is the place on the value 1, where the lines are most often crossing each other. So let's mark that level first. Let's set it exactly on 1. Okay, and now let's mark two other zones in this indicator. So we will make it a kind of RSI indicator. So let's mark 1.10 level. Let's correct the value. 1.1, 1.10, and 0.9. So let's create also this line, and we will and additional zone that we will create is at more or less this level, which you will see in a second. That is very crucial because many times it is also respected by the indicator. So it would be somewhere over here and somewhere over here. The author of this strategy, because of course it's I didn't invent this strategy, the author of this strategy doesn't specify it exactly, but you need to deduct it by yourself when watching the indicator. So let's scroll back and you will see that why I marked those lines. We were respecting them many times. Okay guys, so now let's maybe discuss the first strategy that, with the usage of this settings, this setup with this indicator. So, as you probably deducted, the entry point is when the line crosses the other line, which is in this situation we have the purple line that crosses the blue line to the upside. That means we have the sellers in advantage, and therefore we need to look for a short trade. When it is an opposite situation, the blue line crosses the purple one to the upside, and therefore signaling that the buyers are in advantage, and therefore we should look for a long position to open. So in this example we have crossover over here on this candle. So let's mark the trade somewhere over here. Stop loss would be at the nearest high at 1 or 2 points, and our take profit would be when this zone is crossed. If the situation like this occurs, I would also wait for the whole zone to be crossed like we have it here. So let's check this moment. We have this candle or this hammer candle. So they are both in similar price range, so we can mark it here more or less. So as you can see, we would have 27 pips stop loss and 72 pips take profit. So it is around 2.5 to 1 risk reward ratio, which is very, very good. So now let's go further for another example. We have again crossover here. So we have entry on this doji candle right here. And again, we have the exit point. We could either on this candle exit or this candle. It depends on the situation, what would be going on the market. So let's not be greedy, and for example say we could exit somewhere over here at 35 pips, but our stop loss would be much tighter, much closer, so it would be somewhere over here, right? Let's add 1 or 2 points, so we would have a 16 pips stop loss and 35 pips take profit, so it is still risk reward ratio 2.2. Therefore I think that this is pretty much okay if you asked me. As for the risk reward ratio for this strategy, it also produces false signals, so maybe let's check an example of a false signal. So maybe right here, this one, we have a crossover right here, so we could enter a sell trade, right? We could enter a sell trade. We would add our stop loss somewhere over here, right, on the previous closest high, and as you can see, we would be stopped out, either that the Vortex indicator went up a bit. So as you can see at this candle, we would be stopped out, but then it gave us opposite signal, right? Somewhere over, yes, on this candle over here, and the next signal would be profitable. So as you can see, it is not a holy grail as everything else, and there are signals that would be pretty much false. Therefore we would need to add something, some additional indicator to that. And what is better than the moving averages? So the next strategy would not be based on those zones. It would be just based on crossovers and 200 moving average. Okay, so we have our moving average line right now, and let's set it to 200. And the situation is as follows. If we have this spike ruins for us the charts. So for this strategy, it goes as follows. If we have the price below 200 moving average, we are taking only short signals. And if the price is above 200 moving average, we are taking only long signals. So in this situation, when we had right here price, the crossover was here and the price was at the moving average but slightly below. So let's check this trade. So yeah, let's mark it with this tool. Let's mark the stop loss, which would be over here, which is the closest high to this point. We have 22 pips, 23 pips as stop loss. And in this situation, we are not using those zones. So as I most often, suggest, use a 3-to-1 risk reward ratio. So if we have 23 pips stop loss, therefore we should use 69 pips target. And yep, okay, it's almost 69. So this particular example was profitable, but we could also use a combination of those two strategies. So we could exit at somewhere over this candle, which would yield us a similar, maybe slightly worse result. But it also depends on the example. I just show you how those strategy works, and I will do also a backtest for those two strategies. And I will share it with you, but on Instagram and TikTok account. So be sure to follow Litefinance broker over there on other platforms, because I am also posting stuff over there as well, such as these strategies and the backtests of those strategies. So yeah, also what you could do, as I said, combine that, and most probably it will just depend on the overall asset which you use. This is a British pound against Australian dollar. So I think that will be all for this video. Hope you like this one, and you will check this strategy. And if you did know this strategy before you watched this video, so let me know in the comments what was your experience with it, what was your results, your scores with trading this strategy. As I said, I will do this backtest a little bit later for this strategy, and yeah, we'll share it with you on other platforms. But till then, hit me in the comments what do you think about that, and what are your results if you have come across this strategy previously. And of course, subscribe to this channel for more this kind of content. Take care, guys. Bye.